Good evening. This is the Elliott Wave Weekly Update for the S&P 500, being recorded on Friday, August the 8th at 5 p.m. Pacific Daylight Time. I'm going to start here on the cash market, the SPX, and I have it opened up to the largest or most extensive amount of data that I have available on a monthly basis. This particular chart goes back to 1928. So effectively, we have about 97 years of data. So um, let's see where we are. So I usually start with just a quick recap of this very large picture. So here I have, this is the key to the color code for the degrees that I'm counting right now. And I began with the grand supercycle, which I normally don't because I think it's very hard to determine something that large, except how Elliott provided that for the Dow. So I just did the corresponding levels, which was the high in 1929 and the low in 1932, where in the Dow, Elliott had placed Grand Supercycle Wave 1 and 2. So beginning with his count, actually, I'm just picking it up and taking it forward. So here we have Grand Supercycle Wave 1 at the 1929 high, Grand Supercycle Wave 2 at the 1932 low. Therefore, from that level, we began a Grand Supercycle third wave, which you can see is almost a century in progress, just the third wave. So when we feel that we hear all the time that analysts are always talking about that the market just constantly goes up, it's like, well, true, if we're looking at this particular wave count, yes, we're not due. I mean, if anything, we're now coming close to being due for a cycle degree fourth wave. But what comes after that is a cycle fifth wave, which will then be completing the supercycle wave 3. So we then coming down 1 degree off a grand supercycle, we have supercycle, of which we have 1 and 2 out of 5. So we basically can say we are in supercycle wave 3 of grand supercycle wave 3. So we're in a 3 of 3 move. Okay, that shows why we have all of this strength in the market that we've had for decades. Now, we cannot also belittle or take away that there was a crash, there was another correction there was a correction here. This was the back in, I need to get rid of that so I can get my timelines. This is the 70s. There was very strong stagflation back in that time. And then we ran up. This is the crash of 87, barely noticeable. This was the great financial collapse of 2008, 2009. So we've had quite a bit of different varying things. We've had war. This was World War II in this area down in here. And this is the reconstruction. This is the stagflation. This is the recovery. So again, coming up from, we're in supercycle wave 3. It'll consist of 5 waves of cycle degree, of which we have 1 and 2. So we're basically have been in a cycle third wave since July of 1949. So also very long in the making. Again, we're really looking at about 76 years that this has been in a cycle third wave. And within it, we've had a lot of things. We've had one crash, we've had a pandemic crash, we've had the great financial collapse, we've had periods of stagflation, periods of inflation, periods of deflation, etc., all grouped into this thing. And also the Vietnam War. So we've had wars in there and also the Gulf Wars, etc., all the way through. And still, we are in a progressively growing bull market. All right, so inside cycle wave 3 are going to be 5 waves of primary degree, which we have 1, 2, 3, and 4 complete. Wave 4 is the one they completed in 2009. And so from that point, we've been in a primary fifth wave, which has been in effect since 2009. So the primary fifth wave has been in effect for 16 years, over 16 years. So that's how long this one's been going on. And then within that primary fourth wave, there's going to be 5 waves of intermediate degree, of which we have 1, 2, 3, and 4. Now I can bring this down. Let's take it to that one, the 5-year weekly. And there we have intermediate 3, intermediate wave 4, all of primary wave 5. And there, what does that put us in? We'll put us in intermediate wave 5 of primary wave 5 of cycle wave 3. Now, so we have intermediate 3, intermediate 4. That was the top in 2022 for the SPX. And then right off of that, that was in, I think, March, was it? No, January. January the 3rd. So, and then we just went straight down for 10 months. This is October of 2022. That's where this latest rally phase began. What's inside of intermediate wave 5? 5 waves of minor degree, of which we have 1, 2, 3, and 4. Minor wave 4 reached its low in April the 7th of 2025. So this is recent. So from that April the 7th, we have been moving up in a minor fifth wave. That minor fifth wave is going to complete not only itself, but intermediate wave 5, primary wave 5, cycle wave 3. Now, I can bring it down to my daily chart. Here we are inside. Actually, I need to take it to my 3 weeks so we can look inside this thing. So here we have minor wave 5. We're coming up in a, minor wave 4 completion. We're coming up in a minor wave 5. It will consist of, now I can take it down to the daily. It can consist of 5 waves of minute degree, of which 1, 2, and there we just finished 3. Minute wave 3. So it's minute wave 3 of minor wave 5, of intermediate wave 5, of primary wave 5, of cycle wave 3. We're getting close. So we're in the minute fourth wave of minor wave 5. So minute 4 of minor 5. We got another, we were rallying here. We got another low to make here to finish minute 4. And then we start to rally again for what I think could be the grand conclusion of this very long-term cycle wave 3. Now, daily, we're inside of minute wave 4. I'm going to bring it down to the hourly chart. Let's take a look at what we're doing inside minute wave 4. The SPX, I've been talking about, and now I've actually just labeled it properly. I've been talking about it as it relates to the ES, that instead of doing 5 waves down, I was going to put it as an ABC. And that's what I've done. So there's A, there's B, there's C. Now, that's 3, that was 3, and now we have 1, 2, 3, 4, 5 for wave C. I just didn't put the labeling on. I will if necessary. I did put it in the futures market. Coming off of that, this is where I have a little bit of a difference, right? That I've put in A, B, C, but instead of marking this as minuette wave B, I have relabeled it as, so I dropped these down a degree and labeled this as sub-minuet wave A. And this is sub-minuet wave B. So what we're in is sub-minuet wave C of minuet wave B. Now, I also discussed that, and today, the SPX made a new high over this A wave. So that also supports that we're likely in the C wave, and that C wave will likely get us up into what I would consider as the irregular B wave territory. Now, I'm thinking the entire C wave. So here we have it. Most common for a C wave on a fib level is that C equals A, and that comes in at 6486. I've also been talking about that in the SPX and also within the futures, more so in the futures, that the 6,500 level seems pretty much like we're going to get there. They keep planting the call wall up there. They keep planting gamma up there, which turns into a magnet for a lot of algorithms that are just, as we moved higher, they're just going to go up and grab it because they need it. For whatever they're doing, they need that kind. They want to get those fills. They want to get that level in. And so 6,500 does not seem so far-fetched. In fact, 6512 in the cash is just 1.382 in terms of the B wave being an irregular. So we have 1.236 And also then 100% for the C wave at 64.86, 64.80 to 64.86. That would fulfill an irregular B wave as well. Now down below, we have 64.28, which is the existing high, which is 60. Whoop, let me get back there. The existing high is 64.27. Cash today only got up to 63.94, almost 63.94.50. So, but I think that because the futures market continued to rally, that we have a fair chance that at least we may get to in the SPX above 64. So, and if the call wall remains at 64 coming in on Monday, then I expect it to be taken out. And that'll give us that boost to finish these waves. So it's a little bit difficult for me to kind of pinpoint where 1, 2, 3, and I think 3 is not done. So you can see it's not very clear here. Even if I drop it down and put it on a line chart, it's like 1, 2, 3, 4, maybe. And then we're going back up. No way, no matter what, I don't think it's done. So I'm going to rely more on what I'm doing over in the count in the futures market to kind of catch up with this, or this catches up with that. So here's the A and here's the B, looking for the C wave. That's our first marker. If it gets there and kind of that's all we get, then it's just going to be a big flat without getting up to here. And so the first most common is C equals A. Second most common is actually 1.618. Third most common is 0.618. So don't expect it to exceed and go all the way up, although it could. Every time I say that, it proves me wrong. But if we get 5 waves up and we only get to here, then it's just going to be a big flat ABC. And we'd be looking for that C wave to come back down. And that's in the SPX. I feel differently with the ES. So I think that they'll catch up with each other. And I think we do get above here. All right, so moving averages, you can see, bing, 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 in alignment to go up, and now very cleanly in alignment to go up on the hourly chart. On the daily chart, also. In fact, they never really did anything different than others, just continued to show that we are going higher. Even though we corrected, we had a steep correction. We came down at that point. We had broken the 8, we broke the 30. They retook them pretty quickly. And that just kind of turned everything back around. And so I think we can go up in that irregular B that'll continue here. Then we might peak and we'll come down as that C wave picks up steam and pulls the market lower. This remains the window that I'm looking for. That's the fourth wave of one lesser degree. Remember, we're in a minute wave 4. Where we're going to be looking for the terminus, the endpoint of minute wave 4 within the price territory of the fourth wave of one lesser degree, which is the minuette, and there it is. I've blocked it off for us. So that is where I think we come back to, and that corresponds with the 0.382 level, which is 5,900 basically. So I still think it's like, I think all the way through this, 6,000 is likely going to remain pretty strong support. It has been for over a month. Via the large gamma number 1 has sat at 6,000 for the longest time, and that's in the SPX. And I think that continues to hold. So we might not only get down to there, and therefore it's 236. Now, the higher we get in this thing as an irregular, then we're still going to be working with coming back down, and our major fib level would be 1.618, and that might point to here, it could point to here, or somewhere in between. We don't know yet, so we'll have to wait. So that's kind of the picture for the cash market. Seems to be a little bit behind the futures, but I think they sort of jive now, and it was the cash that kind of cleared up that it was an ABC down for wave A. All right, let's go over and take a look at that futures market. And again, I'm just going to keep it here on the daily so that we can see there is minor 4. This is all a minor 5. 1, 2, 3. So we have there, buried in there, is the minute third wave, and we're in minute wave 4. So let's take it down to the hourly, then we can go take a look at minute wave 4. So there you can see minute wave 3, got a nice 5 coming up. There's the fourth wave of one lesser degree, but we got to go lower than that. So I probably have to, we'll find out. All right, so what we're looking at here, let me just hold on one second. Yeah, it is. It still is. Okay. And I'm not sure why that hasn't changed yet, but I haven't. So it should be down lower. Should be here. We'll see. I may have to take a more serious look at that. But in any case, let's look in the inside of this. So minute wave 3. So here we have it. A, B, 1, 2, 3, 4, 5, wave C. And this was a difficult count. I have to say it was. And then once the cash market made it clear for me, and I just kind of went back and thought, I know I could do an ABC coming down, but I thought it counted better as 1, 2, 3, 4, 5. But now we see it is likely an A, a B, and a C because we're getting very close. Even if we don't go to new all-time highs above this, and we stick underneath it, which I don't think is going to happen, I think we will break it, then it's still a flat, which is why it has to be the ABC. So I'm leaving that. Here is now, this is where it changed, as if you've watched the NASDAQ, same thing in the NASDAQ, where I've taken the ABC part down a degree. Why? Because I need to, this works better if this is the A wave, the sub-minuette A wave of minuette wave B coming up. So that's A and that's the B and not 1 and the 2, because wave 2 cannot break this high, and it basically is extremely close. So once it breaks that high, then it breaks the pattern, because wave 2 cannot exceed the starting point of wave 1. And I should think that's pretty logical, because then it is not a wave 2, because wave 2 corrects wave 1. Well, if it exceeds it, it's not correcting it anymore. So put the A there, and you see I've had to add additional colors so that I can show the degree, dropping everything a degree. And so I got this nice kind of, whatever you want to call it, green, lime green. Down there's for the 5 waves up for the C wave, and then to put the A wave on top. So here we have the A, the B, and the C, A wave on top. Coming down in the B wave, and then we have it A, B, and the C wave coming down to finish the sub-minuette wave B. Then we start back up again in a C wave, which will always be 5 waves. So we have 1, 2, 3. I'm marking, but I think we're going to get up a little bit more. I think we will get cleanly above 64.27 and get up closer, maybe even as high. That's the 100 to 64.24, which I think we closed above it. And so it kind of opens the door. Maybe we can get as high as 64.58, maybe, but or somewhere in between. I think we might do that on Sunday, or we might hold off until Monday morning when we get the full market kind of doing this thing. So, and then we'll look for a small 4th wave, which right now we're looking for maybe back to 64 in the futures market, 6,400. That's kind of looking like that might be the previous 4th. And to get it up there, do another 4. So that would be the 4th of this internal third. So we got 1, 2, 3, 4, and then we got the 5 coming up. And I think we got a little bit more to do. Then we correct back down and then come back up in that 5th. Now, this is the one where we have the potential to get into the irregular. So before we get to the irregular, it would just be still holding underneath that high of 64.68. And we could get up there if we kind of 3, 4, and a 5, and the 5 doesn't surpass 64.58, then we're staying underneath. And then this, even in the ES, is going to be a big flat. And then we're just looking for that C wave to come back here, not to get down there, because it'll follow the rule. The rule is on a flat, that A and C would be equal. So if it gets up here, then we're going to be looking for 1.618, and then it's should come down below this level and maybe get down to 61.51, depending on how high it gets. But our first box of, or cluster of resistance is right here, 64.51, 64.58, 64.67, all right there. Now, I think it exceeds it, but it might have a little bit of punching to go to get through all of this. Plus, we'll see where the gamma levels are going to come in on Monday. They might gather up here as well. And then if they do, then we have 1.236, which is actually preferred so that it is a clean irregular B wave. It gets up to that 1.236, which is pretty common, and then also reaches 100% for wave C. And that is the most common. So we have two most commons meeting up at the 65.21 to 65.25 level. So we can say 65.20 to 25 is a nice little resistance zone to complete this. Punching through that may take us up to 1.382, which is 65.55. But I think once we get above 6,500, that additional push that'll come from it might be another 20 points in the future. But actually, it's 6,500 in the SPX would likely equal 65.23 by the time we get ready to trade it. And don't forget, it loses about $1 a day now in premium. So as we march towards that September future. So again, it might be 23, and that could just be a call wall by then. We'll find out. We'll see. So that's kind of the picture that I have right now. It's getting detailed because I want to make sure that we're really going to be tight on getting up to our levels and making sure that they fit so that I can make any adjustments to the count. Now, one thing that I will say that I hope we all understand, that Elliott wave, when in progress, changes because the market changes. The market is very fluid. The market reacts to news. The market reacts to earnings. The market reacts to everything that could affect any of its components. So we have to be prepared that as long as my larger count remains that we're in a minute fourth wave, and then I'm looking for an ABC. And we know the two basic structures. One, the first one that I was using, that it's going to be a zigzag. Once it starts advancing too high, you get back over to that ABC, and that lets us go to flat to an irregular. And that's now ending up being the case. So I do believe there's more to go, at least to keeping it to a flat, which is 64.68. Actually, yep, 64.68, which takes us right to that top. And we could get there. And we could finish this up there. Or it's just going to be 3. We come back down, we go back up, 6,500. And that would be our next level. All right, that's actually going to be it. Spot gamma levels will be updated on the morning update on Monday morning. And so this completes for the weekly. And I'm working on an announcement that I'll be making within the next week or so that do involve memberships, and it involves a trade room. So more on that coming up. I'm working out some details, and I'm kind of excited about it because I think it could really be worthwhile. Okay, that's it. Our next update will be Monday morning.